Let me welcome on board then consulting editor ET Now, Mythili Bhusnurmath as well. Mythili, hi morning. Seems like a 25 bips hike is pretty much on the cards and factored in. I think it's more the shift in policy stance, whether it's going to move from neutral to signal any sort of, end to the current tightening cycle or not.
Well, yes, the markets are certainly factoring in a 25 basis point hike, though strictly speaking, there is a case, a very strong case for a pause, as two of the three external members have already pointed out. Simply because at this stage, a 25 basis point hike serves no purpose. Monetary policy acts over a very long lag of about 3 to 4 quarters, and you can't make up for time that you've lost by going in for higher for longer. So the entire focus on inflation at this particular juncture, given the trade-offs, is, I think, a little misplaced, particularly because financial stability has entered as a new consideration. Of course, in India, financial stability as of now is not an issue, primarily because our reliance is on retail deposits. The bulk of the banking sector is owned by government. So none of the issues that really plague the banks in the US apply over here. Even so, I would think there is a case for a pause, as Jayant Verma and both Ms. Goyal, Dr. Goyal has also pointed out. But I think the Reserve Bank will opt to play safe simply because they can't afford to take any more flack. So I think they will hike 25 basis points. As far as the stance, it's really not very important because even the rates don't carry much weight in terms of signaling. So stance is really, just semantics, I would say. But maybe they would move from withdrawal of accommodation to something a little bit more dovish.
But given the fact there has been a pivot when it comes to the macro landscape across the world as well, do you think it increases the chance of any rate cuts happening this year itself, or that's not what we're talking about at this point of time? It's only probable in calendar year 24?
Yeah, well, I think rate cuts are completely off the calendar. There is absolutely no case given how high inflation is. So at best, you can hope for a pause, particularly because in India, unlike in the West, we've had high inflation for much, much longer. Now, close to 3 years, RBI has already had to write one letter to the government, and the time may soon come up for them to write another letter saying why have they failed to stay within that band. So I don't think there's any question of a cut at all in the near future.
Okay, but what about the expectations with respect to growth and inflation? Are you expecting some sort of tinkering there as well?
Oh, well, growth, we've already seen the World Bank has lowered India's forecast for this fiscal. We'll have to see what the RBI's own view on that is, because the fact is that the world economy is slowing down. We've seen signs of recovery in China, but all over the West, there are signs very clearly of the slowdown happening. The US is still doing reasonably well. The labor market is quite hot, but the impact of the rate hikes, which have been much more dramatic and in much shorter a period, is bound to be felt. Add to that the new political uncertainty introduced in the US, financial instability. So I think the world is going in for tough times, particularly as far as trade is concerned. And exports have been a major driver of growth for us. So that will be missing this year.
We were just chatting with Upasna Chhachra from Morgan Stanley, and she actually believes that if there is a 25 bips hike this time, which is pretty much well on the cards according to her, this could very well be the last rate hike of the current cycle. Let's hear out her views.
We are also expecting a 25 basis points rate hike tomorrow. We think that should be the last rate hike in this cycle. So we're looking at a terminal repo rate at 6.75%. I think the upside in the inflation numbers that we got in Jan and Feb sort of cemented the case for another rate hike, but this should be, marking the end of the rate hike cycle in our view. The key to, I think, watch out for in tomorrow's meeting would be on the stance. So we are not expecting a change in stance. We think that the external factors, the uncertainty around them has increased especially in the last month. So we think that RBI or the MPC will likely not change the stance tomorrow. But I think that's one key thing to watch out for in terms of how or if any, there's any change in the wordings of the stance from the RBI. And secondly, I think liquidity is also on top of everyone's mind. So anything on that front that RBI indicates, again, we are not expecting too much coming out on the liquidity front as well tomorrow, given that we think that RBI will do a rate hike and also not change stance. So in that context, it will be sort of inconsistent to come up with any other measures in view of the liquidity issues that are on top of it.
Okay, so that's a take coming in from Upasna. Less than 3 minutes for the rate decision to be out. But Mythili, is there anything else that you'd be watching out for in terms of commentary, in terms of any other liquidity tightening measure, etc.?
Well, I think we will hear the governor talk once again about how low rates on government securities are a public good, because just recently the RBI cancelled the entire auction on T-bills because the market was demanding higher and the RBI was not willing to concede that. So I think we will hear some talk about how it is a public good, forgetting completely that banks are actually commercial entities and they're not in the business of doing public good in that sense. That is one. So we might hear some talk on that. We might hear some talk also on the developmental aspect and also on the fact that there's no need to worry about financial stability of banks, which I entirely buy. In the Indian context, there is no case really to worry about financial stability of banks. So I think we will hear some reassuring comment on that score. I'd like to see what else they have by way of developmental aspects and whether at all they talk about CBDCs, because there's a great deal of rethinking all over the world about the need for CBDCs and whether there is a need to even proceed even slowly, even though RBI has said we'll proceed very slowly. Many central banks are having a rethink on whether there is a case at all for CBDCs at this juncture. So let's see what he says on those fronts.
Actually, if indeed it is a pause this time, how do you think then that the RBI is going to tackle inflation? Because, I was just looking at the Jan-Feb CPI numbers. They're still at 6.4, 6.5% and all the core measures are still pretty much sticky above the 6% mark.
Well, the tragedy in the Indian context is since a bulk of the consumption basket is really outside the RBI's purview, which is why the RBI needs to act much more quickly and much more firmly when inflation starts rearing its head. Because as we've seen, food and fuel constitute well over 50% of the consumption basket. So RBI's play for monetary policy is barely about 40 to 50%. Given that the RBI does not have the luxury of the Western central banks to wait, unfortunately, the RBI preferred to think, following the Fed, that inflation was transient, was temporary, so they were late to react. So which is why at this particular juncture, even if they were to do that 25 basis point hike, it would not change the inflation picture very much. Because if we have inflation, a high inflation in India this year, it would be driven primarily by food, as we're seeing uncertain weather patterns. We're seeing, rains in the north just when the wheat harvest should have been harvested, the wheat crop is ready. So I think it's food and possibly fuel. We don't know what's happening to fuel. We've seen fuel prices inch up. So those are the dangers really. Monetary policy has really not very much say. Hence the reason for RBI to wake up early, which unfortunately they did not. And today we are paying a price for that.